Day trading sounds exciting, buying and selling stocks in the same day, trying to make quick profits, but most people jump into it completely wrong. They see clips online of big wins and think it's easy money, when in reality, it's one of the hardest ways to make money in the market. So in this video, I'm going to break down how to actually get into day trading the right way, without blowing up your account. First, you need to understand what day trading actually is. Day trading means you're buying and selling financial assets, stocks, forex, crypto, within the same day. You're not holding anything overnight. The goal is to take advantage of small price movements and stack those gains over time. Sounds simple, but the difficulty comes from how fast everything moves and how easy it is to make emotional decisions. Before you even think about placing a trade, you need to get the basics down. That means understanding how markets work, what moves prices, and the difference between things like market orders and limit orders. You also need to learn how to read charts. At a minimum, you should understand trends, support and resistance, and basic candlestick patterns. You don't need to overcomplicate it, but you do need a foundation. Once you've got that, the next step is choosing a market. Most beginners try to trade everything, stocks, crypto, forex, and that's a mistake. Pick one and focus on it. Stocks are usually the easiest place to start because there's a lot of information available and they're generally more stable compared to something like crypto. The key is to get familiar with how one market moves instead of spreading yourself too thin. After that, you need a strategy. This is where most people go wrong. They jump in with no plan and just start clicking buy and sell. A strategy is simply a set of rules that tells you when to enter a trade, when to exit, and how much risk you're taking. For example, you might decide you only trade when a stock breaks above resistance with strong volume, and you exit if it drops a certain percentage. The exact strategy matters less than having clear rules you actually follow. Risk management is the most important part of all of this. You can be right only half the time and still make money if you manage risk properly. A common rule is to risk only a small percentage of your account on each trade, something like 1% or 2%. That way, even if you lose multiple trades in a row, you're still in the game. Most beginners lose because they go too big too fast and one bad trade wipes them out. Before using real money, you should spend time paper trading. This means practicing with a simulated account where you're not risking anything. It might feel boring, but this is where you actually learn. You can test your strategy, make mistakes, and build confidence without losing money. Once you can consistently follow your plan and show some level of consistency, then you can start with real money. Small amounts at first. When you do go live, keep your expectations realistic. You're not going to make thousands overnight. In fact, most traders lose money in the beginning. The goal early on isn't to get rich, it's to survive, learn, and improve. Think of it like a skill you're developing over time, not a shortcut to quick money. Another thing to be aware of is the mental side of trading. This is where a lot of people struggle. Fear and greed will mess with your decisions. You might close a winning trade too early because you're scared, or hold on to a losing trade hoping it comes back. The only way to deal with this is to stick to your rules and treat trading like a process, not a gamble. Also, be careful with all the gurus online promising easy profits. If it looks too good to be true, it probably is. Focus on learning from reliable sources and building your own understanding instead of chasing shortcuts. To sum it up, getting into day trading the right way comes down to a few key things. Learn the basics, pick one market, develop a simple strategy, manage your risk, practice before using real money, and keep your expectations in check. It's not easy, and it's definitely not quick money. But if you approach it properly, you at least give yourself a chance. If you rush it, you'll lose. If you treat it like a skill and take your time, you'll be way ahead of most people who try and quit.